Yep, the markets have once again opened with major losses this morning. There it is. Let's bring in CNBC senior markets correspondent Dom Chu. Dom, what are you watching here?
All right, so Mika, Joe, Jonathan, as we're watching another 1,300-point drop as we see things in the Dow developing right now, it's kind of important to put some of the context around it. In the 2 days since really the tariff announcements have come out and we've seen that 2-day market reaction for Thursday and Friday, data from S&P Dow Jones Indices now shows that 2-day drop in market value at just around nearly $6 trillion from the U.S. market wiped out. If you look at it from the record highs that we saw back on February 19th, that same data shows a nearly $11 trillion drop in the value of the stock market here in America since those record highs. Now, as you talk about what's happening today, we're seeing the follow through from what happened over the last couple of days, but a lot of it is due to this idea that there is still this notion people don't understand what the real effects of these tariff policies will be on not just the U.S. economy, but the global economy overall. That macro concern and that uncertainty is at least triggering some investors and some traders to rethink the assumptions behind what they think companies are actually worth. For that reason, you've seen a number of analysts and economists across Wall Street start to ratchet up their expectations for the odds of a recession. Of course, in a recessionary environment, when the economy is slowing down or actually shrinking in some cases, you have a scenario where the value of companies, the value of the economy goes down. If that is the case, then markets go down with them. The issue that right now that a lot of folks are dealing with is this kind of where does the administration blink or where does the Fed maybe step in if it does so at all? Money markets, those financial instruments tied to, dollars and bonds and everything else, have now priced in what could be 5 interest rate cuts by the Federal Reserve by the end of this year. Now, the Federal Reserve has not indicated that they are imminently going to do anything with interest rate policy, but the data that comes in is going to help guide what their decisions are. I would point out, though, how quickly the narrative, the story around the economy and the American economic system has shifted from being one that's a little bit more fearful of inflation. And yes, tariffs are inflationary, certainly in the short term. But what does it mean for the long-term prospects for the global economy and the U.S. economy? Right now, 10-year U.S. government bonds are trading with a yield of 4%. That kind of a level doesn't imply that there's any real fear of long-term growth or inflation at all. And that's the reason why a lot of traders are a little bit concerned about whether or not we are going to be in one environment where the economy is slowing down. I'll also point out that where the rubber meets the road for a lot of these companies out here in America is indicated by how the technology sector performs. It is by far the biggest part of the American stock market. Those types of companies and even some of the billionaires who are the founders and CEOs of them have lost billions and, in many cases, hundreds of billions of dollars for a certain group of people over the course of the last few days. So, Joe, Mika, Jonathan, this is a scenario where I'm not sure who the winners are or what the long-term plan is, but that's the conversation that's being had right now. What is the long-term plan, and how do you gauge success because of it?
Well, I guess the winners could only be the people who saw this coming and are shorting the market right now, because there are a lot of people who have lost $11 trillion. That is spread out across the economy, and a lot of people really damaged by that. Dom, thank you so much for being with us.
Thank you.
Greatly appreciate it. Let's bring columnist and member